Well, U.S. futures are lower this morning, as we just saw, as U.S. China trade tensions dominate investors' outlook. Our next guest says investors need to be exposed to macro markets to help diversify their portfolios. David Aspell is Co-Chief Investment Officer, co-CIO at Mount Lucas Management, and he joins us now. David, thanks a lot for joining us. How are you and your colleagues trying to protect your investors' capital right now?
Hi, thanks for having me on. Well, what we do is run both macro strategies and systematic trend following strategies. And what they do is they tend to do well when volatility increases in macro markets. And, the headline driven volatility can be hard to navigate. Generally, stock markets and credit markets, they just, as you can see, they just can't stand this type of headline driven volatility. And we've got an administration that's coming in that sees volatility as a feature for negotiating leverage, I think. Big macro policy goals and those things are running through all markets currently. And what we see is the ability to be able to be both long and short things, trading commodities. You can see you were just talking about the big moves in gold and big moves in natural gas and oil today. These are the types of positions that we have on, and we're trying to pick up a risk premium there. That type of exposure is different than what other people have, and we think now it's a good time for those type of investments.
Well, how are you positioned on crude oil right now? We're looking at it on our screen right now. It's down by more than 4.5% today alone.
Yeah, so we run systematic trend following. If the trend's going down, then we're short. So we've been short it for a while. We're picking up some of that short move today. This is similar to gold. We've been long gold for a number of years. It had a bit of a sell-off a couple of weeks, or in the last 10 days or so. But broadly, it's sort of flirting with all-time highs. It's up again today. These are the kind of positions you have. There's big macro shifts running through markets, and gold is one of the epicenters, oil is one of the epicenters. So we have those positions on.
Are you short on equity markets? Are you short, for instance, the S&P 500?
No, we don't. In our strategy, we don't trade stocks. We think that generally, if investors are looking for strategies that can help diversify equities and you're trend following, then it doesn't help those investors for us to be long equities if they're going up, because when they start to turn, they can move quick. And generally what we see is we want people want us to be in different types of exposures than the equity market. So no, we don't trade equities.
One metal that trades on expectations of global economic growth or weakness is copper. We've seen copper's been volatile recently. It's still, mind you, trading at relatively high levels historically. We're looking at copper now. It's tumbled to $4.19. It was very briefly above $5 per pound. What kind of positioning do you have in copper?
Yeah, we've been long of copper, and this one's one where we've got the move wrong. We've been long it for a while. We're starting to reduce now. I think overall it's been a profitable trade. It picked up the move, as you were seeing from global growth picking up and China stimulus picking up, and then there was a tariff-led rush of people trying to front-run tariffs by racing to get imports into the US, which was moving it around a lot. So we picked up all of that move. And then we've given some of it back over this past week, because the growth driver seems like it's overtaken that tariff-led trade. So we are still long. It's been an okay trade, but we've given back some of the recent gains in it.
What about fixed income? Interest rate expectations are fluid, to say the very least, and certainly in the U.S., investors have pulled forward their expectation of when the U.S. Fed will act to cut rates. We're looking at U.S. bond yields right now. How do you navigate this fixed income and interest rate environment?
Yeah, it's difficult, huh? So yeah, I think what you're saying is right. Overall the strategies have been short fixed income for a number of years, really since the move driven by the Russia-Ukraine war, where rates started or 10-year yields started at very low levels and started to move up as inflation ran through and then rate hikes ran through. It depends exactly where you're looking. Places like the UK, we've maintained the short. It's going to be difficult now. I mean, they're really moving around a lot. This isn't really the goal of the strategy. I think the administration had talked about being okay with some growth weakness if it was to help get rates down, but that's now not happening. The Fed's in a real tough spot. There's a lot of uncertainty around tariffs and how that's going to play through inflation. Are we negotiating deals that aren't going to, so the tariffs aren't going to be here for very long, or is this how it's going to be? And then it makes it hard for companies to plan. It makes companies nervous to invest, and interest rate expectations are trying to deal with that. But in a slowdown, the Fed would normally begin to reduce interest rates. But in a world where inflation may be coming back and inflation expectations are thought to be a driver, I don't think they really are. But it leaves the Fed in a difficult spot. They do have a dual mandate, and if inflation is pinging around, it makes it certainly more difficult for them. I would have thought that the growth impact here is going to be larger than the inflationary one, and they'd end up cutting. But it's difficult, and you're seeing curves steepen. So generally, we're short of bonds. It's moved around a little bit, but we've been short of bonds for the best part of the past few years.
Do you think the Fed will cut in May or in June?
I don't know. That's a great question. I could see it happen. I mean, you're starting to price it. I don't know. It's certainly they're in a very difficult spot. I don't know.
Okay, we'll leave it there. David, thank you very much for joining us. David Aspell is Co-Chief Investment Officer at Mount Lucas Management.